Hey folks, Alex here, 95 to Freedom. In today's video, we're going to give an update on my portfolio. It's been a few days since I've made a video, been a little bit busy around the house. We're going to talk about week 41 dividends, what I received last week. We're going to give an update on my portfolio because it's going to look extremely different, and I'm going to explain my reasoning, what I've been doing, and we'll give an update on the market. So let's get started. Lots to cover here. For those who are new folks, my name is Alex. I track my investing into high yield dividend portfolio on this channel in order to achieve financial independence and be able to leave my 9-to-5 job. So if you like this kind of content, make sure you hit that subscribe button and leave a comment below. Are you on a journey yourself? Do you find this information useful? So I'd like to hear from you. Apologize for the sound ahead. My microphone does not work today, so I gotta use the MacBook's microphone. Okay, so we'll start out with drum roll with what's going on in the market first, and then we'll get into what I got in dividends. So market was extremely green today. Volatility was down. VIX down 12.27%. S&P 500 went over 1%. Dow 1.12. Nasdaq 1.37. And the Russell almost at 2% today. You see that the gold is still climbing, folks. We're almost approaching $4,400 in gold, which is pretty crazy. All right, so what did I get in dividends? Well, for those folks who follow me, you know that I've invested primarily in Roundhill. I did have a couple of YieldMax funds and NEOS funds. So for week 41, I got $511 from XDT, $541 from QDT, $517 from OT, $439 from YBTC, and I got Wpay, $257 from Wpay. Now I've held this one for just the week before, really kind of testing the waters with a little bit of the shares. Maggie got $508, and I re-entered into HOOW. And I got 43 bucks from that. Blocks was a recommendation from some of the people commenting. I got $23 from that. And my total comes out to $2,841.64. So not bad, not a bad week. We'll do an average for the past, let's say, 6 weeks. We got $17,000 on average, $2,845. So really this last week was about the average that I've been making for the past 6 weeks. Now, let's get into my portfolio, folks. Whoa, for those who are been around the block, you know that I used to have a little bit more money in here. Well, I'm going to explain what happened. I did not lose any money, folks, so don't worry about that. Many of you might not know, but a few months back, basically around July timeframe, in order to build up this portfolio, one of the strategies that I've used, and I don't recommend anybody doing this, I took a HELOC against one of my rental properties. Okay, and that allowed me to get an extra $70,000 for this account. My account's been floating around $250,000 for the past couple of months, and that's really what you guys have been seeing. Now, we've seen a lot of volatility in the past couple of weeks, a lot of uncertainty in the market. There's just been a lot of different stuff going on. Now, the loan that I got, without boring people, it was just like an interest-only loan. Basically, my principal wasn't getting paid down. And I really just wanted to test out this theory, right? Can I actually make money using these high-yield dividends? And that was really the point of my experiment. Now, if you guys have been following me for the better part of this year, you know that I've used margin a lot. At some point, I had margin dollar for dollar. Basically, for every dollar I've invested, I borrowed $1 from Robinhood. And by the way, folks, I don't know if you've seen my new hat. I got this from Robinhood. This is not sponsored by Robinhood. I actually had to use my credit card points to get this hat. Market cap, pretty cool, huh? So I have the 3% cash back from Robinhood, that credit card, which is pretty cool. So what I'm getting at is with Robinhood, I was getting like 5.25% margin interest rate. So I wanted to arbitrage that and utilize the lower obviously percentage that it's offered by Robinhood, and capitalize by bringing some money in from my real estate to see how I can capitalize on this. But anyways, it got me thinking a little bit. I was a little bit overstacking. I just had like debt upon debt upon debt. And, in a bull market, if you can get a nice stretch, I think you can make out. I don't recommend anybody doing that, but I've come to the conclusion that I've ran long enough, and I didn't want to continue to risk that. So I ended up lowering my margin by a lot. I ended up moving quite a bit of money out of this account in order to pay some of that loan down. I'm still going to move a little bit more money over. So you'll see this number fluctuate until I'm able to de-risk just my personal finances, my real estate finances. I just want to put myself in a better position. The reason for it is after some hard thinking, I've built something for myself and my family. I want to make sure that I can retain that, and I don't want to just gamble on our future. So that is the reason for this account changing. Now, the boring stuff is out of the way. Folks, the biggest announcement is I reshuffled my portfolio. One of the biggest things I did is I sold off Ulti. Okay, you know that at some point on this channel, I had like 40,000 shares of Ulti. And that worked out okay until it didn't. Okay, so, and then I got in and I just had a couple thousand shares of it. But really, this last couple weeks, I've been really like itching to unload it because it hasn't been holding up its NAV. And the last nail in the coffin was last week. Basically, if I would have invested that same money into Ulti, if I would have invested into something like QDT or Maggie, I would have done so much better. So anybody who's going to argue with me, there's a lot of, I guess there's really three different types of people in this community. There's people out there who simply can't read charts, and I don't want to like be disrespectful to anyone, but if you look at just the 1 month performance of this, you see that every time you have X dividend, you get your dividend. There's really no recovery. This fund just continues to go down, 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 and down. Now, we had a hopeful period, and this is where I got in. Okay, this flat period that we had after the lowest of the low back in April, we had a nice run, and there were a lot of optimistic people. What can we actually recover out of this lowest of the low? Now, we've enjoyed this flat period, and I think folks who got in when this was flat, you were able to see a recovery. But again, we're back to this downward trend, and it's not sustainable. At first it was 10 cents, then it became 9 cents, then it becomes 8 cents. At first it was $7 a share, then it was $6 a share, now it's $5 a share. And if I was a guessing man, in 2 to 3 weeks, we'll be under $5. That's just the way this works. This fund is overpaying. It's obviously using options, and they're capped at the upside. So you're seeing this fund pay out of its NAV. Now, I sold this off completely. I've sold off also YBTC, and again, this is another fund that I had a lot of faith in. I had quite a bit of dollars in this. This is built on Bitcoin. This is from Roundhill, and Roundhill, to my opinion, does a better job managing their funds than YieldMax. Now, again, some people might say, well, you got in when it's expensive. Well, if you compare this chart with the way that Bitcoin has been performing, you can see that the correlation doesn't line up. And even if you compare this to a fund from Neos, which probably doesn't pay as much, but you can see there's actually upward trend and momentum. I've lost a lot of money on YBTC. Okay, let's just put it that way. All the dividends I was getting was not offsetting the way it was dropping. And we know that Bitcoin's been on a downfall, and I understand that. But in those periods when it was climbing to $125,000, YBTC did not correlate with those moves, and that was a concern for me. Now, funds like Maggie, XDT, QDT, I really enjoyed the performance of those funds in the last few months. I've been doing really well with them. But something to point out, and others have pointed out, that ever since we had the scare of the tariffs, these funds have not recovered. You can see here QDT has not recovered from its high of $40. We're still $5 below that. Now, this does pay 35% dividend, so obviously you're getting that money up front. Similar story from XTT, which is built on the S&P 500. You can see we've enjoyed this nice flat period. Maggie has been one of the best performers, built on the Magnificent Seven. And you can look at the year-to-date chart, and you can see that we actually have a positive 1% move since its beginning. So that is my reasoning for selling all this stuff off. Now, what did I end up buying? Well, I got into Wpay. Now, there's been a lot of YouTubers, obviously. Everybody's getting into Wpay. It's the next shiny object. And I listen in the community. This is not an echo chamber. I'm not just listening to myself. And the funds that Wpay holds, they're not new. They've been around the block. Funds like, if you look at the Roundhill website, you can see their weekly ETFs. These are all the funds that it's holding. BLTW, TSLW, NFL. So you got the Netflix, you got the Tesla, you got Palantir, you got Hood, you got Berkshire Hathaway, you got AMD, you got Amazon, Google, Microsoft, Nvidia. All of these funds are held within Wpay. Now, Wpay is, it's fairly new, so it hasn't been around that long, but it's holding funds that have been around that long. And if you look at all of their performance, you can see that if you have a nice blend of them, you can see that they're able to actually pay these dividends, and we're able to uphold our NAV because these are very strong companies. If you look at our 1 month chart, we're up 2.3%. Year to date, we're up 5%. Now, you see we had a high, obviously, at $56, and we've had a low of around $52 and the inception of around $51. So now we're kind of like in this middle space, right? We can go down, we would have bought a little too high, or if this moves up, we would have gotten in a decent price. But one of the things that I wanted to do was, and honestly, this is just from my mental, I guess, state. I wanted to de-risk, right? So I wanted to pay off my HELOC. I wanted to lower my margin, and I wanted to be able to just get into some fund that I can stand behind, that can show that it can uphold itself, that it's not going to be eroding, and I want to just benefit on getting those dividends. So that is my experiment today, folks. I have 3,300 shares of Wpay. So last payment was about 86 cents per share that it paid last week. Now its ex-dividend is going to be tomorrow, and we're going to get a payment on Wednesday. Now, if we go to the Market Chameleon, it's a great resource for those folks who are into dividends. You can see all of the payment history, okay? So this is another thing that I like about Wpay, that it's flexible with the income that you're getting, okay? So for those folks who are like on a fixed income, I guess this could maybe steer you away a little bit because you see that fluctuation. But for those folks who care about the NAV, I think this is perfect. You don't want to be overpaid just for it to eat at its NAV. You can see the first payments were about $0.50, and this one, the last one we got was 85, almost 86 cents, which was really great. So I got into this, folks. I got into Wpay. I trimmed down my Maggie position, my QDT, my XDT. I kept my Eggy. I really like that one. I kept my gold IAUI. I still have 20 shares of HOOW, and I have some shares of blocks, and then these are a couple of free stocks. And by the way, if you use my referral link in the description below, you can get a free share of stock if you open up an account with Robinhood. Okay, so my buying power. Let's look at margin. Okay, where am I sitting on margin and what is my goal here? All right, so right now I'm using $52,923 of margin. You can see my margin maintenance is $67,000 and I have a buffer of $113,000. Now you can tell that my account has shrunken down. Last time you probably saw my account was in the 230s. We've had a pretty rough week. But like I said, I've transferred a lot of the money out. I really want to de-risk this account. Now, my main goal, I think, is after this week, I'm going to make a decision whether I'm going to pull out any more money out of this account or I'm just going to pay off that loan just from the dividends that I'm going to receive. But ultimately, I think my goal is for at least a few months, I want to run this account without any margin. One of the reasons, one of the issues with margin, besides, obviously getting your account taken away in a huge correction, one of the issues in these huge fluctuations that we had, when we had days that our accounts were down like 3, 4, 5, 7%, when you're getting those dividends, you really don't feel like you're getting them because they're going against that margin that you owe now. Your account basically doubles down on your losses, right? So if I get rid of my margin, every single dollar in dividends that I'm getting, no matter what happening to my account, I don't have to worry about it, okay? That way I can just take that money, and let's say if Wpay goes down to $50 for a few months, I'm not concerned about that because I'll be getting it. I don't owe anybody anything. And obviously it's, the slower approach, and it's not something that I've done in the past year. If you documented, if you, track me for the last half a year, you know that I've always used margin. But when I started out, I didn't use any margin. So I'm kind of going a little bit full circle here. Anyways, don't want to waffle too long. This is what I got going on. Wpay, folks. What do you think in the comments? Am I jumping on this bandwagon a little bit too early, or is this the future? Obviously, the payout is phenomenal. They're paying quite a bit, kind of like what Ulti was paying, just a lot. But I figured like I'd rather risk with my own money on something like Wpay than to risk so much margin plus my money on everything else and what's going on in the economy. So that is my thought process. This is where my portfolio is at. I'm going to get back into weekly updates, daily updates. So you'll see another video for tomorrow. But that's all I got laid out for today, folks. Thank you for watching. And if you enjoy this, please leave a comment. So take care, folks.